All right. We are now on Tuesday, and it is 6:05 p.m. It is the 15th of February, and we're getting CPI, PPI numbers, and we had the CPI come out this morning, covered it in my newsletter, and here's what you basically did in CPI, and you saw that in the morning flash too. In the CPI, you didn't run away with the tariff numbers, but they're there. And they're now making their presence felt, and they're gradually taking the market up. And that's what the market's now looking at and seeing. How did that sit with the stock indices? Not all that well. The market's now seeing this is the first real rash of inflation that they're seeing. Is it going to get worse? Jury's out on it. But you can see how the markets gave it up. And I was pretty happy to see that the market that I thought could give up the most was the Dow actually did do that. And the strongest has been holding up the Nasdaq. The Russell's holding up very nicely too. It didn't go up that much. So it's the other markets. But you'll get to the charts with me as we get into the financials. In the metal markets, I do think that this will ultimately be friendly to gold, but just not here. The timing's wrong. The market's got to work through a few more things before it decides what it wants to do. Now, in terms of news, you're going to get a lot. You're going to be getting here, you're going to get the weekly indices coming out for you in terms of the MBA numbers and all that. That's at 6 in the morning. The Richmond Fed, we're going to get Mr. Barkin coming out, and he'll address the Carroll County Chamber of Commerce event Wednesday morning. June prices for the producer prices, we'll be looking at that. Now, they are looking for them to be up 0.2 month over month, and for the core PPI up 0.2. So again, not sitting flat. We didn't get numbers that jumped more than on the CPI the market was looking for. They either came in down on average 0.1, but higher than they were in May. And that's what got the market realizing, I think, that the numbers are starting to show up with the inflation. We'll hear talk tomorrow maybe about this, but Cleveland Fed President Hammack will speak at the Cuyahoga County Community College event, and that'll be on at 8:15 in the morning. Fed Governor Barr, they're going to speak at the Brookings Institute. And the Federal Reserve, oh boy, we're going to get the Federal Reserve releasing the Beige Book, and you've got to look at that to see what people think in their local parts of their regions. And then we have Indonesia. So another event happened. And in Indonesia, the president had given them a 32% tariff letter like he's given so many others. And Indonesia worked magic. And they went to the president, they got their tariffs reduced. Goods imported from Indonesia will face a 19% tariff. And this is not assuming that they're importing goods from China and they're sending them here. Those will come at a much higher number. But on their own goods, a 19% tariff. They've agreed to purchase $15 billion in U.S. energy. That's a big win for us. They're agreeing to buy $4.5 billion of agriculture products, a big win for us, and 50 Boeing jets. That's a win for the president, any way you want to go about it. These Trumps were originally set at 32%, and this is the first country. So you've got to ask yourself now on the 15th, and we're roughly 2 weeks away from the 1st of August, how many more can come in and get these type of deals done? I mean, it is amazing. Think about it. And the president's really adding to the coffer and getting things done. All righty. When we look at the gold market, gold is still over the 18-week average of closes. That's good. That's not bad. That's a good thing. The next thing I look at in the gold market is the sideways action. You can't get away from that. The first thing as a chartist you should always learn to do is on that chart you're trying to catch what is the market doing right now. Is it trending or isn't it trending? Am I jumping into a market that has been in a trend that has taken off, or am I coming into and looking at a market that's trying to figure out what the next move is? This is a market that's trying to say, what is the next move? The pattern currently has one of a higher high and a lower low. That is not a trend. That's a waiting pattern. The battleground is the 18-day average of closes. And from there, the markets often determine what the next set of the moves is going to be. You're caught in the upper Bollinger Band to the lower band, but you haven't even touched them since this one springboard from the high here, down, and then that was it. So you let that part alone. So I can see this market doing this, twiddling its thumbs, trying to figure out, am I going to get more numbers? Are they going to be inflationary from tariffs? Everything's going to hold together. Prices are going to take off. I got to be taken with that. Or these tariffs are going to be much more modest, trying to think we're going back to $4,000 gold. That could be a pipe dream right now. Which one of the two? When we take a look at how the market's trying to piece itself in, you can see you're not doing very much right here. And in the SEP gold-silver ratio, it continues on this big drop where silver's been acting better than gold. And I appreciate one of the parties asked me if I remember silver at $50, and the pattern that you have here now, you've got the cup, you've come all the way down, you've got a handle as you're coming up. Remember, you haven't hit $37, $38 silver in decades. Now you're doing it. So there's patterns here. It's too difficult to do it. It'd be a fun thing. I may do it at one point, but I'd have to dig out my old charts. How do I scale them onto everything? I'd have to figure that out. In any case, in the silver, this is a normal correction. This is a bullish market. Got up over the Bollinger Band, giving a bit up, correcting the market as it's pulling back. I say the market's going to look for support. If it drops even to the $37 mark, it doesn't have to, but that's the next support on the chart, the 18-day average of closes. The copper market is doing congestion. So it's got its move. It's got the 50% tariff. It hasn't given up very much from there. Now the question is, building something to work from that zone. And the real question is, how many people from the mining industry are able to take advantage of these prices and do some hedges? That's something else that might be going on. But it's a difficult chart when you get that piece of news that hit it. The platinum is falling more into the story of the gold and the silver, that it's had its runs, it's gone up, made new contract highs regularly, I want to say that, pulling back a little, got overbought, losing the overbought, not ready to do anything. In my opinion, it's got to work a little bit harder. So do I see anything in the metals that I'd want to take my money and put it into? I don't see it right here. So nice to look at, nice to see, but not there. The dollar got a nice rally just today. Just today, I was saying in the morning update, if it can get itself going, can it get it up to the upper Bollinger Band? Kaboom. That's right what the market did off all this news. Now this, by the way, goes a long way in saying that no, that 90 level it may not be realistic to think that anymore. The market is trying to make a stand and say that the 96 level may be the bottom. Now you may get a couple of false tests, you may get tests that hold it, we don't know yet. That's the story that's going on. And that's how you look for it. I had another character that writes me, oh, if you follow Ira's system, he never catches the tops and bottoms. By the way, you are right. That's not the style of trade, okay? You're trying to catch the move. You're not trying to catch the guy that's, how do I put it? Let's start buying it over here. And it keeps going down and down and down on you. What do? Oh, get me out of this, Ira. But this was the bottom. That's it. Nah. I'd rather be the seller on the ways down after it's established whatever the range is. The word is after. So I'll let you people that want to be the heroes do the exact wrong thing. Pick the tops and pick the bottoms. That's what they do in Vegas, and that's how those gorgeous buildings get built. That's my philosophy on it. Are there always exceptions to the rule where somebody's got a good system and he can do that? Of course there are. But it is the exception, not the norm, in my opinion. So what I want you to do, though, is take advantage of what I try to give you each and every morning. In the mornings, join me. At 6 in the morning, I record 40 charts on futures. I'm trying to give you trades, sells, buys, stop orders, profit objectives, and we track them until they end. Nothing general about what we do there. And I do the same identical thing with the spiders, the ETFs. So you see the trades as they're there, you see them as they work out. I promise you, you're going to see losers. I promise you, you're going to see winners. It's really that simple, all right? Done this 60 years. I think I know what they do. The key is, can you hold on to the winners and make something really out of them? And that's how you do it. It's so much easier to do that in spiders and stocks because you don't have to take on 90% leverage, where to trade a futures contract, no matter how small you go, the leverage is large. And that's why the contracts disappear as well, where you get into a stock and it's there. So many different parts to it, but I cover both and I try to throw ideas at you. Just go to iraepstein.com, give it a try. Give it a try for a quarter. See if it works for you. If it doesn't, you go on the website, you stop it. If it does, you got something to owe me. And I have something to owe you, hoping that I can make you a better trader. With that, I'm Ira Epstein. Hope you enjoyed this. I'll catch up with you in the other videos tonight. You take care.